Hello and welcome. You're watching Money, Money, Money. I'm Samira Abdi. Almost everyone I know, and perhaps a large portion of Indians, dream of owning their own home. It's just that security blanket in a world where few other investments provide the safety and comfort that real estate does. Or so we think. Real estate is no longer the promised land for investors seeking the highest returns, and for people buying their first homes, the experience can sometimes be nightmarish. So how do you navigate this tricky world of real estate investing? Harsh Rungta of apnapaisa.com is going to tell us just that. Also with us today, we have two potential investors, Parul Shah and Gaurav Shah. Thanks so much to all of you for joining us on our show today. But let me ask you, are you guys already homeowners? Are you looking to buy? What's the case?
I'm a homeowner.
But are you looking to buy a second home?
Yes, I'm looking for investment in real estate.
What about you?
I'm currently staying with parents and planning to buy a home for myself. Also looking at an investment property.
Okay, so Harsh, we have two more potential investors joining the ranks of millions. But before I get to your questions, I want to ask you, considering the number of people who are now looking to buy their first or second home, would a first home even qualify as an investment? Or is it like, almost a dead end where you're going to be staying and never going to sell it?
When we talk of real estate and we talk of investments, we must define what they mean. I think, let's first talk of investment. When you're buying a house to stay in, I don't think that's investment. I think that's a consumption item. It's just a larger consumption item than, say, a car that you buy or a jewelry that you buy. It will retain value. Unlike, say, a car whose value will go down, it will retain some value. But just like jewelry is something which will retain its value for some time or for quite some time, the issue is that you're never going to sell. When you buy an under construction property, I think most people forget they are not buying real estate. They are lending money to the builder. Let us be very clear. For an indefinite period, with a hope that it will eventually, that lending will be replaced by a flat that they will get. Real estate means a house or a commercial property, whatever which is ready to be rented out, to be stayed in, to be used. That is real estate. When you buy under construction, it's not real estate. You are in the risky lending business.
That's quite a pragmatic way. If only more people would look at it that practically. Gaurav, you wanted to know about rented accommodation versus buying a flat?
Absolutely. See, there are some calculations which show that renting a flat and staying in it is a far better option than buying a house for yourself. Right? How far is that true?
This is a debate that I think our fraternity, the financial planning fraternity, likes to promote. Okay, and it's a debate that goes on all over the world. But if you look at calculators anywhere, over long periods, okay, you will find that probably renting out is probably, at least financially speaking, better than buying. The issue with these calculators is it does not take one huge cost into account. The cost is the social cost of not owning your own home. If you look at, say, a society like Germany, only 50% of the people stay in their own homes. The social pressure there probably is less. I don't know. It's just reflected by the statistics. There probably these calculators make sense.
That's true. Actually, in India, property is so closely linked to the aspirations that people have, and which is why even a phenomenal concept like reverse mortgage has just not been able to take off in India because of this aspirational value that a property has.
The other thing I had in mind was I already have a house where we are staying. I'm looking for investment opportunity. So how wise it will be to invest in another real estate vis-a-vis in maybe equity or mutual fund? Because I find mutual fund and equity little more structured investment compared to real estate where transparency is almost nil.
I think you've struck a chord with Harsh on this question.
The key, I think, to any investment, okay, is balance. Okay, just like having an investment portfolio. Now we're talking investments. I think having an investment portfolio that's completely equity does not make sense. Having an investment portfolio that's completely debt may not make sense. It depends on your situation. Definitely an investment portfolio that's completely real estate makes absolutely no sense. Real estate is a lumpy investment. One investment asset is a large value. You can't do it in pieces of 10,000 rupees or even lakhs. I mean, in India it will run into tens of lakhs. The liquidity is not, for example, like an equity. You can sell your equity or your mutual fund, you'll get your money back in 48 hours, right? If you buy ready to move property, at least you will be a little less prone to the kind of things that you have just mentioned. Fact remains, if you have a large portfolio, so only people with large portfolios can afford to have real estate as an investment, right? It should be a certain percentage. To say completely you stay out of it, I would not say so. But if you have a large enough portfolio, maybe a 20%, a 10 to 20% or a 25%, depends on your outlook. Okay, you can allocate to a real. But for that you need to have enough money that after investing in that real estate, at least 3 times more you should have invested in equity, debt and gold.
That's true, actually, and I guess in some ways then property is like gold, it's just something you can physically see, it's right in front of you, and which is why it gives people some sort of safety. But, carrying on this point forward, we've recently seen the SEBI clearance for the real estate investment trusts. Retail investors have a minimum investment limit of 2 lakhs, but is that really advisable? Would you recommend it to clients going forward?
Real estate investment trust, at least in the context of India, is like the fabled unicorn. You still have to see it, right? It hasn't yet come.
And but as a concept, do you think it would work for a retail investor?
So just let's look at it. Given it's going to be concentrated, right? And typically in India, real estate, residential real estate for rent is not a very big market. So typically this is going to be primarily commercial. Liquidity very poor. Yields are, I think, okay, and then obviously they hope to make some money on capital appreciation, but the bets are going to be concentrated. They will have to take large bets. So a fund, say, of 250 crores or say 500 crores would typically have 4 investments, maybe have 5 investments.
Right.
They have to have a minimum of 2 investments, right? So they're going to take concentrated bets, primarily on commercial real estate, but they're going to have yearly yields or monthly yields coming in. So the investors will have income, not just capital appreciation. I would wait and watch, very frankly. If that is the advice, I would wait and watch and see how it goes.
Yeah, that's true, actually. And there's always this, fear when you see concentrated investments, because even if one were to fail, it's almost capable of bringing your portfolio crashing down. But we need to take a very quick break. But up next, we'll talk about what are the common problems that people face when they actually step out to buy a house. The most common, of course, being construction delays. So how to tackle all of that is lined up next. Stay with Money, Money, Money.